Should you buy Nvidia today? Now, chip giant Nvidia is worth more than Google owner Alphabet a day after surpassing Amazon in value. Nvidia posts revenue up 265% on booming AI business. Their revenue year on year, which was shown in Nvidia's website from 2023 to year 2024, has gone up by 126%. And their net income, which is their profit, has gone up by 581%. And if we look at their past 10 years data of their revenue, do you notice that it's an uptrend? But do note that revenue is vanity. So let's look at their profit, which is sanity. Now, their net income, which is the profit, has also gone up tremendously. If we could do a quick recap of all the videos in our TikTok channel, I think the worst is WeWork and Success Resources. Now, on the contrary, just my personal take, I think Nvidia seems to be more predictable and has a brighter future. From the perspective of Charlie Munger, who was the vice president of Berkshire Hathaway, how does he know when and what to buy in the business? So from the perspective of Charlie Munger, there are 4 filters. Today, we're going to focus on the last criteria, which is to buy a good business at a cheap price with a margin of safety. Why is it so important for us to buy a business at a cheap price? Now, imagine if you travel back in time and you bought Tesla on the 5th of November 2021, you would have bought it at $407. But for today, the share price is about $200, which means that if you're sitting on Tesla stock right now and you bought it during its peak, you will have a paper loss of 50%, which means that in order for you just to break even, the share price today has to go up by 103%. Yeah, so you realize that losing money is quite easy and making money is a bit difficult, which is why it's very important for us to buy a good business at a cheap price. How do you know whether a business is cheap? Now, there's a whole long list of criteria. One common criteria, which is called PE ratio. PE ratio is simply equals to the price per share divided by the earnings per share. So price per share is the share price that you see every single day that goes up and down. Earnings per share means if you buy one share of the company, what is the profit that the company makes? If the PE ratio is 20 is equals to 20 divided by 1. It simply means that for every dollar of profit that the company makes in a year, you do not mind paying $20. Now, it also means if you buy a business where the PE ratio is 20, it takes about 20 years for your investment to break even. But unfortunately, we cannot use a PE ratio as a standalone ratio. Now, one way to look at PE ratio is really to look at the past PE ratio of the company. This diagram shows the PE ratio of Nvidia for the past many years. On the 18th of July 2023, Nvidia's PE ratio peaked at 247.36. And as of today, the PE ratio is 89. So in other words, if you have bought Nvidia during its peak, 247, you'll be sitting on a huge paper loss today. So now the question is, with Nvidia's PE ratio equals to 89, is it considered cheap? Now, if the PE ratio is equals to 89, it simply means that for every dollar of profit that the company makes, you do not mind paying $89. It also means that it takes about 89 years to break even. If I compare the PE ratio of Nvidia to all other companies, you may notice something very interesting. PE ratio 89, Nvidia, Intel 111, and PE ratio of AMD is 334.27. Now, if you look at Nvidia today with a PE ratio of 89, how does Charlie Munger know when to buy a stock? So in his mind, there is a framework. Basket A, low risk, high return. Basket B, high risk, high return. And basket C, high risk, low return. Which basket do you think Nvidia falls into? Please comment on this video politely and respectfully. And please feel free to share with me your thoughts about Nvidia, whether is it a good buy today.